Hello friends, welcome back to Wealth Guru, and here I am back again with another exciting video. And today we are going to discuss on a hotel stock which has been recommended by 5 Paisa. Is Lemon Tree Hotels. So before we go into the details, so just let's quickly look at what's been recommended by 5 Paisa. So the stock is, as you see, is currently trading at 64.5. But as per the 5% recommendation, the stock can go up to the levels of 78 in next few days. So maybe a month or so. So right now that is the target set at 78 and the stop loss being set is around 63. So that's pretty much what's been recommended by 5%. But we'll go into the details to find out whether it makes sense for you to invest this stock at this point of time. All right, so just to briefly look at this company, so Lemon Tree Hotels is the largest mid-priced and third largest overall hotel chain in India. So it has been there for some time. So it operates in upscale segment and in mid-price sectors, consisting of upper mid-scale and mid-scale economic segment. So they also have a hotel chain called Lemon Tree Premier, which is a premier segment of its hotels. So it's been in the middle range to higher kind of middle range, you can say, in this chain. So it's a pretty decent company. Has been there. It has been able to navigate through the COVID time. So it's really that's a big positive because anyone who has been able to go through that time has really to be something great to look into. So that's something good about this company. So before that, so let's look at what the fundamentals. So market cap of this company is around 5,110 crores. The current price is 64.5. Book value is 10.5. So what makes it is the market cap. Sorry, the market price is almost six times the book value, which is pretty high, I should say. On a high low range, it's a 52 high 71.4 and a low of 36. So it's playing in that range. But if you look at 1 year chart, the stock has moved up significantly from levels of 36 back in 11th of August 21 to a level of 64. It has been touched the level of 70 back in 2nd June 2022. So it's moved a lot. But if you look at a 5 year chart, the high it reached was around 83, 84 sometime back in 2019. But after COVID hit, it reached almost level of 15 during 22nd May 2020, and from that level has been moving up. So the charts look good. So let's look at the pros and cons of the company. The pros is company is expected to give good quarter, considering it's back from COVID and a lot of people have been started going back for vacation and all. So expected to have a good quarter going forward. But on the con side, the stock is trading at 6.14 times book value. I just said before, the company has low interest coverage ratio. That's not good. So it can't really pay its debt for a long time. At the lowest, it has low interest coverage ratio. Promoter holding has decreased over the last quarter. It has reduced by 1.93%. The company has delivered a poor sales growth of minus 0.45% for the past 5 years. The promoter holding is pretty low right now. It's almost 23.95%, and company has a low return on equity of minus 7.75% for the last 3 years. So the things which should be of concern to us is one, the promoter holding is low, as well as the company has low interest coverage ratio. That means it doesn't have a lot of cash to pay its debt. So anything of a calamity or something happens, let's say lockdown happens again, it doesn't have a lot of steam on it to sustain for another maybe 2 3 years. So that's these are the two negatives on this stock. Let's look at the peer comparison. The peers are Indian Hotels, EIH, Chalet Hotel, and Lemon Tree is number four. If you look at the current market price, it's almost at par with those companies. But if you look at the net profit for those for these top four hotels, you'll see Indian Hotels have been making profits of almost 74.19 crores. EIH is also doing profit, but Lemon Tree has made a loss of almost 24.62 crores. So that's a negative on the stock. On the quarterly result front, it has done good recently on the last quarter, but it's expected to do much better from here onwards. So that's negative. On the profit and loss point of view, it has almost sales of 402 crores, expenses of 284 crores, operating profit at 119 crores. And if you look at the profit before tax of minus 145 crores, and that's primarily the two things which are contributing to operating profit, as you see, is 119 crores, but profit before tax is minus 145 crores. So what's impacting here is one is depreciation, which is almost 104 crores, and another is interest, which is 174 crores. So the company has a huge debt, so that really makes the interest really go bad. So that's actually another problem with the stock. So net profit, as you can see, has been minus 87 crores. So it's been pretty much negative or net profit a negative company for quite some time, except in 2018 and 2019 where it was making some profits. But in 2020, as the COVID started, it started making loss, and it's increased in 2021, reached a highest level. But in current year, it's showing signs of declining. So that's the good news. Probably it will go down from here, and that's something we should look into. Balance sheet wise, as you can see, the borrowings is almost 2,128 crores. That's a big concern because it has a huge debt. Doesn't have much of cash reserves, just 40 crores, so doesn't have much to pay those debts. But if you look at cash flow from operating activities, positive, cash from investing activities negative, and cash from financing activity negative. So it has good cash flow from its operations. So that's pretty much it. As I said earlier, the promoters' share has been steadily declining over the years. So from a level of 31.05%, it has gone down to 23.95%. So that's been declining for some time. So overall, it's a kind of a good company, but has gone through a rough patch because of COVID. Now, since the things are showing signs of improving, it definitely makes sense to look into the stock and maybe hold on to the stock for some medium to long term so that you can get benefit out of it. But if you are a risk averse investor, you should get out of the stock and rather go to some stocks like Indian Hotels to invest on those. All right. Thanks a lot. Thanks a lot for watching.